China's economy seemed unstoppable. Year after year it grew at extraordinary rates. It was transforming the country from one of the world's poorest nations into the world's second largest economy. Entire cities appeared almost overnight. Hundreds of millions of people entered the middle class. Factories across China produced goods that filled stores around the world. For many people, it seemed like China's rise would continue indefinitely. But today, that assumption is being challenged. China's economic growth has slowed. Youth unemployment remains high. The country's once booming real estate sector continues to struggle. And for the first time in decades, China's population is shrinking rather than growing. Individually, each of these developments is significant. Together, they tell a much bigger story. This isn't simply a bad year for China's economy. It may signal the economic model powering China's remarkable rise over the past 40 years is entering a new phase. If that's true, the consequences won't stop at China's borders. They will reshape supply chains, manufacturing, global trade, and ultimately the prices consumers pay around the world. To understand why, we have to go back to the system that made China's rise possible in the first place. So how did China become an economic superpower? The answer is globalization. Beginning in the late 1970s, China opened its economy to foreign investment and manufacturing. At the same time, the world was becoming more connected than ever before. Trade barriers were falling, shipping costs were declining, and companies realized they could manufacture products on the other side of the world and still sell them profitably in the United States and Europe. China was in the right place exactly at the right time. With hundreds of millions of workers, rapidly expanding infrastructure, and government policies focused on exports, China became factory of the world. Everything from clothing and furniture to electronics and machinery began flowing out of Chinese factories. The arrangement benefited almost everyone. Consumers got lower prices, companies earned higher profits, and China experienced one of the fastest economic periods of growth in modern history. For decades, it looked like this system would continue indefinitely. But what if the conditions that made China's rise possible are beginning to disappear? So are those conditions disappearing? And what are they? Increasingly, the answer appears to be yes. For decades, companies built their business around one simple idea: manufacture products wherever costs were lowest, and in many cases that meant China. But today, the priorities are changing. The COVID-19 pandemic exposed just how vulnerable global supply chains have become. Factories shut down, shipping slowed, products that consumers had taken for granted suddenly became difficult to find. At the same time, geopolitical tensions between China and the United States have continued to rise. Tariffs remain in place, export controls have expanded, and companies are increasingly looking to diversify their supply chains by moving some manufacturing to countries like Vietnam, India, or Mexico. This doesn't mean China is disappearing as a manufacturing powerhouse. Far from it. But it does mean the world is no longer moving toward deeper globalization at the pace it once was. For an economy that built its extraordinary growth on exports, manufacturing, and global trade, that's a significant change. And it couldn't be happening at a more difficult time. Because just as the outside world is becoming less favorable, China is also facing serious challenges from within. So what are those domestic challenges? The first is slowing economic growth. For decades, China regularly posted growth rates that many developed countries could only dream of. Today, that pace has slowed considerably. While China's economy is still growing, it is no longer expanding at the extraordinary rates that fueled its rise. The second challenge is real estate. For years, it was one of the primary engines of China's economy. Developers built entire cities. Families invested heavily in property, and local governments relied on land sales for revenue. But that model has come under increasing pressure, leaving many developers burdened with debt and weakening consumer confidence. The third challenge is demographics. China's population is aging, and fewer children are being born each year. A shrinking working age population means fewer workers supporting more retirees. That's going to make it increasingly difficult to sustain the rapid growth of previous decades. The fourth challenge is youth unemployment. Millions of young Chinese are entering a job market that is becoming more competitive. For many graduates, finding stable, well-paying employment has become more difficult than it was for previous generations. None of these challenges alone would necessarily change China's future, but together they reinforce one another. A weaker property market reduces household wealth. Slower growth creates fewer jobs. Demographic change limits future economic expansion. And a less globalized world makes it more difficult to rely on exports to offset those problems. So what does all of this mean? It doesn't mean China's economy is collapsing. China remains one of the world's largest economies, a global manufacturing powerhouse, and a major technological and military power. But it does suggest that the environment which fueled China's extraordinary rise over the last 40 years is changing. The era of ever-expanding globalization appears to be giving way to a world that places greater emphasis on resilience, national security, and diversified supply chains. China isn't facing just one challenge. It's confronting a changing world while also managing significant challenges at home. How successfully it adapts won't just shape China's future. It will influence the global economy, international trade, and the balance of power for decades to come. Hey, if you're interested in understanding the forces shaping our world, not through politics or headlines, but through economics, geography, demographics, and history, subscribe to America's Geopolitics. There's a lot more to explore. Hey, this is Frank with America's Geopolitics. If you like what you heard, don't forget to hit the like and subscribe. See you next time.